What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 17th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about whether or not we're planning to short cryptocurrency markets. I want to spend some time to discuss why we have the current sentiment we have at the moment and what we're planning for here over the next coming weeks, as well as what we'll be looking for when it comes to price action. So without further ado, we're going to be diving into Bitcoin and altcoins and so much more throughout this video. So if you guys happen to enjoy it, consider dropping a like. It's one of the greatest ways you can support the channel. We've also got a sponsored update on one of our long-term partners, Radix DLT, which is one of the leading layer 1 protocols we're keeping an eye on. So stay tuned for that. You guys won't want to miss it. All right, let's go ahead and kick things off here, guys. I want to start here on the weekly time frame, because if we really zoom out here, we can see that since back in late June, we have been in practical stagnation here when it comes to price action, facing resistance at the same range we faced resistance back at April. Now, it is important to note here that versus last time, we are starting to see at a minimum some resilience of holding up in this range. We're not seeing follow through, which to me is the biggest warning sign here, especially considering the optimism we've had over the past couple of days and weeks with the XRP news, some of the positive early developments for Coinbase. Just all these kind of things that, again, at the end of the day, do hold some positive weight, but they're not enough to really drive price through this supply range or resistance range in price. It's a very fancy way of essentially saying that there are still more sellers than net buyers here when it comes to market order flow. There will always be an equitable amount on both sides of the trade, but it's about who's driving the market order flow, who's FOMOing in or funning out, essentially, right? Are we getting more people eager to buy or eager to sell? And right now, the sellers are weighing down price. If we take a look here on the weekly, though, right, we generally have been continuing to maintain the blue trend here, so the bulls are still in charge. However, if we do cross a little bit lower here towards around the upper $28,000 range, that is when our indicator on the weekly time frame will likely flip red. And being at a higher price range than before, this is going to probably provide a pretty ample shorting opportunity. So we're going to be keeping an eye out for this. Now, if you guys are interested in getting access to this momentum indicator, as well as a whole range of other great information that we put out, we just wrote an article about another sector entirely separate from crypto that we think has the chance to make multiples upon multiples of returns and the equity markets over the next couple of years once things really start to get euphoric again. I definitely recommend you guys check out the dash report down below in the description. You guys will get access to this momentum indicator. You can always, of course, follow along here on the channel, but this will allow you to get access to it so you can use it yourself, and not just crypto markets, but a whole range of other markets on various different time frames. So I'll leave a link down below in the description. You can get 20% off on the subscription down below on an annualized basis. But the key point here I want to mention is that until we get that red flip, we're not shorting here, right? That's our key kind of driver here. And in many cases, we like to have at least 2 weeks here. We had one red flip here, but again, usually for me, in order to engage in those shorts, I usually kind of lean in here towards getting at least 2 weekly closes here, and that's going to give us really the fuel that, okay, this isn't a short-term deviation. I want to talk about that here because some of you may remember on the monthly time frame, our indicator has flipped blue here. There's no doubt about it. We got a close on the blue monthly time frame. And this has definitely left me in a cautious position here. However, it's important to note that if Bitcoin simply declines another pretty much $1,500 from this point on, we are back in territory where the indicator will flip red. And as you all know, no indicator is perfect here, but we sometimes get deviations, right? Like we saw back here in March of 2020. However, afterwards, we got a blue flip back here essentially in April 2020, signaling the start of the new bull market as we had a rush of liquidity in the system. So when I see this on my indicator, if we start to get that by the close of this month here, we've got a couple more weeks, if we start to pull back here, that is going to give me the telltale signs, especially considering all of these supposed positive developments in the crypto space that are going on now, that it's time to start preparing for a short. We will have a red flip on the daily, we'll have a red flip on the weekly, and a red flip on the monthly. And that to me is the sign, especially at a much higher price range, that I've got a good risk to reward profile for a short setup. Right? It's not so much about getting the absolute top or what exact price we're going to be shorting at. It's about knowing whether or not momentum is on our side. I want to go ahead and talk about a couple key things here. We're not only still targeting targeting ETH BTC coming down into this range here. So this could be one of those accelerated plays. If you're looking to short Bitcoin, you also could short Ethereum if you have direct access to shorting crypto markets. But we're going to be taking a different avenue, which again, we'll talk about in the Dash report for those who are in the US and don't have access to derivatives or futures contracts. I want to go ahead and just kind of talk about this thesis though, right? Why are we considering shorting the market? Isn't the thesis that you never short crypto, that you should never do this? Well, yeah, during euphoric periods, for sure. I would not, during a bull market, try to short the bull market top or try to go heavily short, even during those corrective periods during the market. What we're experiencing here now, though, I think is a very different environment. And the price action, and not just the price action, but the data across the board is showcasing this, right? I know a lot of you guys back a couple days ago were feeling probably some immense FOMO, and I'm not blaming you. I'll be honest, I was on the edge of my seat watching what's going on with XRP, seeing altcoins making those kind of moves. You can't help but watch it. You can't ignore it, right? But at the same time, it's a matter of when you see those moves, seeing whether or not they hold up and if there's follow through. And not just in XRP, but we want to see it in the whole broad crypto space. Well, let's go ahead and dive into a couple different data points and see whether or not that optimism is really reigning supreme now. Because last week, we saw an expansion in stablecoin liquidity of $74 million. And that may sound like a lot of money, but if you take a look here at the chart, where I've got my mouse here, essentially on the week of July 10th, that is an expansion of 0.07%. Not 7 percentage points in the stablecoin liquidity supply, less than a 1/10 of a percentage point. And as you can see here, just looking at the chart, that's nothing. In fact, we've declined since back in May of last year, down about $24 billion to where we are here today. So pretty much no new entrants of stablecoin liquidity. So this tells me either one of two things here, right? Either there are some barriers that are preventing people from bringing stablecoin liquidity to the market. That's not good news. Or the more likely case scenario is Tether is still operating, normally, hedge funds, family funds across the world can easily be putting liquidity into the space right now if they wanted to. That they're not rushing liquidity. They're not getting excited about this news around Ripple's case or XRP's case in the SEC, right? So again, we're not seeing the inflows we need that really spark new bull markets. Just take a look back here from 2018, even during those rough periods of time in the market, we were seeing expansion of stablecoin liquidity by about 25% here, and then a huge surge here where stablecoin liquidity more than doubled in a matter of just a few months during that relief rally. This is a big reason why we saw 300% worth of gains for Bitcoin during that period of time, and many altcoins popping off as well. And this time around, only a mere 100% move, right? I know a lot of people like to give me a hard time instead of saying only a 50 or 100% move in price. Yeah, it's nothing in crypto, guys. I'm sorry. I know some people may disagree with that, but to be honest, at the end of the day, there are a lot of professional traders who watch, meme stocks, shit coins, all kinds of different things in the market. Sorry for my language, but just total like short-term pump moves. And they sit there and they go, yeah, I missed it. Okay. Why? Because they don't want to chase those rallies, right? I could be here today and tell you guys to go leverage trade and go use excessive risk and go buy Carvana stock after it's gone up 1,000%, or go buy in a GameStop, GameStop, a company that is a slow dying retail chain that has not been able to make any meaningful transformation in its business model. I could go tell you to buy XRP after it made a 74% move when there's no liquidity to back it up, and incredibly thin order books that can go the other direction just as fast, especially if the developments that people are preaching are so optimistic may not be so optimistic after all. Go ahead. If that's the case, go do that. I only recommend you do it with a short amount of your capital, because my job here is to help you guys protect your capital here. When I see these signs, I'm not optimistic. In fact, if anything, I'm cynical. I'm a little bit kind of questioning of the motives behind price action and seeing whether or not there's really going to be the momentum to drive it. And you don't have to look too far. You don't even have to look at altcoins. We can look at the leader Bitcoin here. And generally speaking, since back here in late June, we've just been going sideways. We've not been able to clear past this range. There's clear resistance here. Now, I'm not saying you guys should go, again, I'm not trying to tell you guys to do the opposite here, to go 5, 10x short or anything like that. No, you can set yourself up for a potential chance where if you get sidelined and prices go up another 10%, you could be losing everything. I'm not here to promote that. And, sure, could I make more money doing that? Yeah, but that's goes against my moral ethics, all right? I'm here to tell you guys about the bigger moves and how you can play them safe. Sure, there's definitely a shorting opportunity, maybe 1, 2x leverage, maybe in various different plays in the crypto space, but generally speaking, we're gonna wait for those cues to make sure momentum is on our side. So we're in cash, we're neutral right now. We are leaning bearish for sure, but when it comes to our activities, we're not shorting the market. I know some people might believe that with the way we talk, but no, we actually have not been opening up any short positions, right? We've been maintaining a cash. And I only say that just to be persistent, let you guys know honestly about where we stand, right? So you know the cues about what we're looking for to short, what kind of standards we need to see here before we really start to short Bitcoin's price. But again, I want to continue to dive through this data like we looked at earlier with stablecoin liquidity. How have altcoins fared here over the last couple of days? Well, we've pulled back roughly about $20 billion from the pump we had here. We went from about 220 billion up to 265 billion. Understandable that you give some, you take some. Essentially, the market gives, market takes. You're going to give up some of those gains here, and again, which is why we don't incentivize people to just FOMO right when prices start to move, right? And this is again a good telltale sign in a bull market. The market gives, and the market gives, and the market gives, and it just keeps accelerating, and that drives excess FOMO, which leads to the sustained positive tone that drives long-term bull markets. Take a look though at what price action did here. We came up towards a very important range here, a range in which we actually chopped around in for some time, looking like we might have actually had attempts to break out of the 200-week SMA. And that indicator we're discussing is the 200-week EMA here. Now there's slight differences between the SMA and EMA. But exponential moving averages essentially move essentially usually faster in this case versus the SMA to adjust to price. Long story short though, again, this indicator was ranging at a higher price range, and essentially price came up and could not get above it for the altcoin market. This is total 2, so it's the entire altcoin market cap excluding Bitcoin, but we subtract ETH, USDT, and USDC, right? Really trying to get the altcoin market here. Well, take a look here at what happened. We came up to this range right when we needed the follow through to push us through and potentially come up and test those higher ranges for a couple extra $10 billion of market cap and maybe set the stage to really break out of this supposed accumulation range. We got shot down big time and have collapsed down about $20 billion, about $25 billion from those highs almost. And we're barely holding on to that 200-day, trying to see if the market has the legs to continue moving higher. If you guys aren't watching these indices here, right, that's why I like to mention them here on TradingView, how you guys can build them yourselves and essentially keep track of these in your watch list. If you're not watching these, you're losing a lot of insight on what could be happening in the market here. Right? And our key version of the momentum indicator here that we utilize with the pivot here shows us the pivot line. This is something, again, you guys will get access to within the Dash report, where essentially there's not only the version that we share here on the channel, but you have one that shows a pivotal line that lets us know when price closes below that line on the next candle, we're going to get the flip, right? So this thing is creeping up here at a pretty steady pace. So altcoins have got to show up to the plate here over the next week or so into the close of the month. And if we don't see that, the longer term trajectory, the monthly time frame, which has already been continuing to maintain red, is going to prove otherwise, that we are still in a bear market, that we do not have the legs for altcoins to truly expand yet, right? And it's more of a time to accumulate liquidity, start doing due diligence, and looking for the plays that are going to win long term. That's the key goal. Now, again, take a look here at our Bitcoin, ETH, USDT, USDC dominance chart. This is a combination of Bitcoin dominance, Ethereum dominance, and stablecoin liquidity. Now, essentially, as these four players make up a larger sum of the market, as they climb higher here towards the 85-90% range, that's when altcoins are at capitulative levels by our definition. That's where discounted valuations are, definitely spread out through the crypto space, and we've got some opportunity to find some great buying opportunities in the market. So that's what we're looking for here. Now, altcoins did make a nice gain in dominance. Essentially, that means that Bitcoin and all these other plays that we listed lost some dominance over the past couple of days, closing down a lot of the gains from early June. That being said, we are still far away from our target range here. This is a typical resistance range for this dominance metric. We can see, historically speaking, the kind of 82% mark of resistance has played out multiple times here for this metric, right? So again, I would expect that maybe this is like what we saw in November of 2022. We come down, altcoins gain a little bit more, people really start to feel the FOMO, and then we start to pile drive. We have the last wave of capitulation. It may not be so fast, it may not be, maybe it will be faster, who knows? Generally speaking though, it's not about the time frame, it's about watching for those dominance levels where we know that capitulation happens, that longs get liquidated, and essentially people start to stack those long-term positions. The accumulators, the bidders come in, and not only that, but they start to drive market order flow and lead against any sell-side pressure. That's what drives bull markets. Not just bidders coming in and providing support, but market order flow outpacing sell-side pressure or sell-side market order flow. Now I want to go ahead and talk about another thing here. The dollar. Now I gotta be honest with you guys here, right? We're not essentially long the dollar by any means. I'm not that much of a contrarian here against Bitcoin, but essentially speaking, generally the dollar here has had one of its worst weeks, right? Its worst weeks since back here in November of 2022. So its worst week so far this year, and excluding that week, there really isn't many weekly candles that have gone down 2.2%. A lot of people are curious about why this is happening. It could be due to a lot of factors out there. It can be due to central banks dumping foreign reserves to protect currency pegs and kind of play into the dollar weakness. You could have it as well due to certain currency pairs against the dollar getting overextended in the short term. It can be due to a whole range of factors. It could also be due to people getting liquidated or people getting knocked out and stopped out of their positions, right? People who had any positions here for the past couple months have likely gotten stopped out. So there's a lot of different factors here. It could also be due to the macro dynamics, people pricing in and believing that inflation is done with. Either way, maybe even also as well, the de-dollarization narrative, many people might argue. Well, again, generally speaking, the narrative has been that when the dollar goes down, Bitcoin starts to move up, right? Dollar's been generally trending down since November 2022, and Bitcoin has been going up during that period of time. Well, what's Bitcoin doing? It's doing nothing here. It's going sideways. It's facing resistance at the same range it did in April. Bitcoin needs to show up to the plate. That's what's so frustrating here, guys. I understand people want to believe that it's a new bull market. I understand 100% price move is not negligible by any means. But still, is it really a new bull market? That's the question I keep coming back to here, guys. We've been at this for multiple months here. And while the dollar, commodities, inflation have all been playing now in favor of risk-on assets, we're still not seeing the follow-through, the risk-on mentality. I want to go ahead and actually bring up some new metrics we haven't really explored here on the channel. There's these really great global indexes by Pepperstone here, the Global 30 Crypto Index and the Global 10 Crypto Index. And what I find really interesting here is a simultaneous pattern here. Right? If we look beyond Bitcoin versus altcoins or even Ethereum, what we can find here is that in these top 10 or 30 market cap cryptocurrencies, we find some really interesting patterns. That essentially back in August, we came back up towards this kind of sideways chop range that we were in back in May. And this was the point of resistance that knocked us back down towards the exact same low range we were back in June in the time of December of 2022. And then we rallied back up here and at the exact same price range in April of 2023, where altcoins were more optimistic at the time, as well, I would say, as Bitcoin. Generally speaking, we got shot down. And then it looks like we're coming right back up here to try against this range. So you've got what looks to be like our range for a potential short, meaning that altcoins could move up a little bit more. Bitcoin can move up a little bit more over the next coming days. Who knows? Generally speaking, this is the kind of range where I'm looking to take more risk on shorting than going long. This is the range down here where you may want to get optimistic or start dollar cost averaging. And don't be surprised if this range breaks and we've got to wait for altcoins to find support at a lower valuation range. These are some key levels to watch for here. Around 4,300 points on the index, 5,000 points on the index, and I would say 6,500 is kind of an initial range for dollar cost averaging. Perhaps down here as well at around 3,400. So there's a couple different ranges here that you can watch for, and as you cross through these levels, you can set kind of benchmarks that you'll get more eccentric on dollar cost averaging, taking more risk when everyone is capitulating, when everyone's being forced out of positions, when everyone's getting tired of the crypto space, when it seems like there's no narratives that can save crypto. That's the time to buy when there's blood in the streets. All right. Same goes here with the crypto 10. Crypto 10, the top 10, obviously being largest market cap, generally in maintaining that position in the top 10, have been holding relatively resilient here. They set in slightly higher lows, but still facing resistance at that range, right? We got the fade here last week, right? If we dive into the shorter term time frames, we got closer and closer, but we faded down a lot of those gains. This is not a good sign to see here, guys. Now the 200-day is on the rise. That is a good sign to see, but it's a matter of price following through here, because if it can't hold this range, we got to hope it's going to hold on the 200-day, and if it doesn't do that like it's done for these past few times, then we're coming back down, and that is not a good sign for a long-term optimistic wave of crypto. I again want to bring you guys back. I know it may seem boring, but talking about global liquidity. All right, take it here to the kind of quarterly chart. Even turn off indicators as well. Just kind of let's go ahead and just hide all. There we go. And just take a look at this, right? Global liquidity is not expanding at the moment. So if we consider this, right? I mean, you can say, oh, technically here, this started this month in July, or in this quarter, we're up 2.5%. Generally speaking, we are down on global liquidity. And the question here remains whether or not the Fed, the ECB, the Bank of Japan, People's Bank of China, are they done contracting global liquidity? Because if we dive back into those shorter term timeframes on the weekly, I don't see any consistent trend here. I see us being down from January. Sure, it's not as low as where we were in September, fair point there. But it's a question of, really direction. There's no direction here. Liquidity isn't entirely in a bearish pattern here, nor is it in a bullish one. But I certainly see equities trading at an excessive premium, diverging away, which leaves a dangerous position where valuations are overbought in the short term, and we have to ask whether or not liquidity is going to catch up and defend those valuations, to justify the valuations. And if not, well, we know that these divergences can happen. It is a normal part of markets, but they usually end up correcting. So, again, guys, we've got to be cautious here. It's about right now doing the due diligence, making sure you've got capital on the sidelines so you can go big on the plays that really matter. That's all that is the focus point for us personally here right now, guys. And speaking about those big plays, I want to spend some time here. First off, if you guys enjoyed the video, consider dropping a like. It's one of the great ways you can support the channel. But I want to go ahead and spend some time to dive into some major updates here for one of the few protocols we are actually excited about that I think has the opportunity to transform DeFi as an industry and really take crypto forward into the next bull market. And that is no other than Radix DLT. So let's go ahead and dive into Radix. Alrighty everyone, so in today's sponsored update, we're going to be diving into some really important updates around one of the few layer 1 protocols we're really excited about, and that is none other than Radix DLT. Now, if you guys haven't heard about Radix just yet, to me, they're one of the few leading layer 1 protocols that's aiming to disrupt the DeFi space in a pretty big way. After seeing the stagnation over the past couple years in Ethereum's ecosystem, as well as other competitive layer 1 and layer 2s, Radix is aiming to do things radically different by introducing a whole new range of concepts, whether it be its native programming language, Scripto, which dramatically simplifies not only the auditing process, but development process for smart contracts, but outside of that as well implements a multi-tiered system such as the Radix engine, its consensus mechanism Cerberus, and putting all that aside, its big emphasis on user experience, which is probably one of the biggest heavyweight issues in the crypto space. But that's kind of the high level overview, and if you guys haven't dove into Radix yet, I highly recommend before we dive into any of the other materials that you guys dive into some of the papers that they have on the website around different parts of the chain, and as well as all the user experience and the actual focus on consensus. But outside of that as well, there's a lot of other great resources, such as the full stack page on Radix's website, which gives you a really nice scrollable version of understanding everything up to date about Radix. That is a great place to go to if you want something visual and you want to see just how much of an impact Radix is going to have on the user experience. But I want to go ahead here and talk about some really important updates. One of the biggest ones was in late June around the push for Babylon's release date. For those who may not know, Babylon is the next major network upgrade, and while it has been a kind of multi-stage process of rolling out, this would be the actual official kind of mainnet release. And essentially, a lot of people were looking forward to this, but there was a delay in the deployment. Essentially speaking, the team decided internally to push back the launch date for this update. And there's a big reason for this here, guys. I think the team did a wonderful job here in the blog post emphasizing a really valuable tweet from Vitalik back in May of 2022. He stated, "My biggest regrets today are not launching ETH1 in July 2015 instead of September of 2014. They are about all the deficiencies in ETH1 that we now have to spend years painfully fixing, whether that be hex tree, RLP, gas costs, no account abstraction. Doing better now will indeed pay off for decades to come." Essentially speaking, the team didn't run into any major critical issues with the network, but rather some user experience issues on the developer side and the user experience side that were very important to fix. And this is an important thing that I just want to go ahead and kind of signal here as a point of discussion, which is that when you're building a blockchain protocol, this isn't like a startup where you can build fast and break things, right? In a technology startup where you have traditional software, where there's no monetary value, where things are centralized and easily to get fixed, you can go ahead and build things and potentially break some things along the way. The kind of Facebook mantra that Mark Zuckerberg kind of capitalized on at that time. However, when it comes to a blockchain protocol, you are building something that once it is out there, it is meant to be changed very little, and it is important to understand that if you want to make those changes, you are going to have to take a much longer time to deploy them. It is important to note that this kind of technology stack that Radix is building is focused on building something for the next decade, building a technology stack that will allow people to build incredibly powerful applications. And there were a lot of good reasons here why the team decided to push back the launch date to September 27th of 2023. And to be honest, that's not too far away. Another additional quarter here and a pretty slow period in the crypto space, I think is the perfect time to be building here. Much better now than having to focus many years out from building certain features that should have already been baked into the chain at the beginning, rather than the exciting stuff we're hoping that Radix and the team will be working on a year or two out that we just don't even know about. So for me personally, this is a really great thing, not to mention for me personally from the investment side, although I can't tell you guys to go out there and buy yourself. It's something you got to decide for yourself. For me personally, it's a time to accumulate more XRD personally. I'm really betting big on XRD, and I think it's going to be one of the few chains that's actually going to survive this crypto winter and really provide an alternative approach to DeFi that isn't just some EVM compatible fork out there on the network like Binance Smart Chain or Polygon that really offers a unique approach. And I think that there are a lot of competitive and valuable EVM chains out there, don't get me wrong, but I have to say here for the kind of alternative approaches, we've seen other networks like Cardano and many others not only gain market traction, but really I think for them, they failed to deliver on building the community and the developer tools that really accelerate developers' creativity, and that's what Radix has really accelerated in personally, in my opinion. Now I want to go ahead and talk a little bit about some of the developments here. One of the big things that pushed for the delay here, or the kind of postponement, was essentially the deployment of RCnet v2. And a big thing that they focused on within this phase release is redesigning the authentication process for developers. This is mission critical here for the crypto space because as people have been kind of deploying applications, some of the early stage projects have been forming within the Radix ecosystem. One of the big problems that a lot of developers ran into is around the authentication process for who has the permission to basically interact with blueprints. These are essentially the kind of core parts of applications that may be built within the Radix ecosystem. So from my understanding here, although I'm not a developer by heart, essentially speaking, this is an important thing for developers who want to essentially kind of define the permissions of who has the right to interact with maybe claiming fees from certain protocols or blueprints that are built, being able to interact with updates to certain protocols, you name it. Permissions are a huge thing, not only in traditional development, but especially here in the crypto space. And this was a friction point that the Radix team found out early on. And I have to say, if anything, this to me is kind of like a testament here to Radix's focus on developers, very much in line with Microsoft's prior experience, and I think eventually Apple as well, where this is focused on developers, because if you can build the best experience for developers, if you can get rid of these friction points early on, once the momentum arrives, once the market traction comes here, it's just going to take off like a hockey stick. If you have constant barriers, if you have to worry about smart contracts having one line of code that is going to lead your contract to become vulnerable and lose all user funds, like the consistent hacks on the Ethereum network and other EVM compatible chains without any repercussions, then essentially speaking, that is why Radix is going to be incredibly valuable. Making sure that this authentication process is smoothed out, and along with that as well, with things like the fee table adjustments here. I think this is a very important thing here long term to make protocols competitive against one another and essentially allow people to adjust that rate. There's a whole range of different things here that come about with this deployment of RCNet v2. So really excited to see this development coming out here and kind of being rolled out on chain. But along with that as well, there's another booster program here that is again showcasing the kind of developer momentum that is building here on the network. So if you guys are interested in participating in some of these programs and learning about what Radix is offering here to those who want to start learning Scripto and building the ecosystem, I highly recommend you guys check it out down below in the description. I'll leave a link down at the website. You can find their blog section in the Learn page and find some great details there. But the big thing here I really want to emphasize here about Radix, guys, as we go throughout the broader process of what Radix is building, this is a massive tech stack for DeFi. If you guys are focusing on the next 2 to 3 years about what's going to really take off in crypto, I highly recommend you guys keep an eye on Radix here. There are very few layer 1 DeFi protocols that actually have the kind of guts to go out there and do something big. Radix has not just been building here over the last 2 years or so. They've been around for multiple years. I met Pierce back in 2018 during the prior bear market, and Radix had already been building for a couple of years since then, only really deploying its token sometime, I think, around 2020, 2021. So it's now finally the time here where you can still get in early on one of these really exciting plays. One that is not building a tech stack just over the last year or chasing trends, but is building something that's listening to developers, fixing user experience issues, and working at lightning speed comparative to other stagnant layer 1 protocols like Ethereum that are already deployed out there, right? And as much as I love Ethereum, guys, I've built in the Ethereum ecosystem over the past couple of years and invested capital into my own startups and crypto. But I gotta tell you guys, DeFi has not made any substantial moves over the past couple of months, really over the past couple of years in the Ethereum ecosystem. And now it's time for a new protocol to shine, someone to come up to the plate and fix those issues in much rapid fashion before things really go live. And I think that's what Radix is doing here at the moment. So if you guys have not watched the Rad5 event video back from a couple months ago, if you have not read that full stack page, those are the great primers to learn about Radix. And from there, you can go on out there. You may end up wanting to develop yourself in Scripto. I would say give it a shot. It's a much more digestible language than many other programming languages like Solidity. And it's something that could allow you to get on the cutting edge of a really exciting ecosystem in the crypto space. That's it for today's review, guys, and quick update on Radix. Thank you guys so much for tuning in, and stay tuned as well for the Babylon update coming in September. If you guys like this video, consider dropping a like, and I'll see you all in the next video. Take care, everyone. I'll see you all on Wednesday.